Welcome to our Investment Thursday segment, the space where we simplify wealth creation, expose strategies that shape your financial future. I'm Nyota Njema, and today we are diving into a question that so many people ask me. Should I invest in land or in the stock market? What's the difference between land and stock market? Land, you're buying a tangible, immovable asset, permanent ownership with potential for appreciation, development, and even rental income. On the other hand, stock market, here you are buying ownership shares in a company. The returns come from dividends and the rising share prices. Both are powerful tools, but how do you compare? Which one aligns to your vision of wealth and legacy? Let's break it down. Number one, tangibility and security. When you invest in land, you are buying a tangible asset. You can see it, you can touch it, you can even stand on it. Land is permanent. It doesn't vanish in a financial crash, or its value rarely goes to zero. That one alone makes people sleep better. On the other hand, stocks, they are digital or paper assets. They exist in numbers on a screen. While you can generate high returns, you can also carry high volatility. A single global event can wipe out significant value overnight. So, if you are looking for a psychological security and peace of mind, here, land wins this one. Number two, appreciation and returns. Here's the big question. What about growth? Land appreciates steadily over time, especially in areas where infrastructure is coming up. Think about highways, schools, or industrial parks. They push land prices up naturally. For example, areas near the newly tendered highway during already showing strong signs of appreciation. The stock market here, meanwhile, you can give you explosive growth. In one good year, a stock can double, but it can also crash by 50% the next year. Over the long term, markets usually give about 7 to 10% annual returns. Land isn't as explosive, but it's steady, and in the right location, it can outperform inflation significantly. Control and risk. Land gives you control. You can decide to hold it, to develop it, to lease it, or even resell it. The only major risks are fraud or delaying title processing, and with proper due diligence, those are manageable. With stocks, you have zero control. The success of your investment depends on how strangers run a company or how global markets behave. So, if you're having a hand on the wheel, land is your friend. Number four, liquidity. Liquidity means how fast can you turn this investment into cash? Stocks are highly liquid. You can sell them in minutes. But here is the catch. If the market is down, you may have to sell it at a painful loss. Land takes longer to sell, but in high demand locations, like areas with ongoing infrastructure projects, land can move surprisingly fast. Number five, wealth and legacy. Here's the game changer. Land is more than an investment. It's a legacy tool. You can pass it down to generations. It appreciates with time. It's inflation-proof, and it creates the sense of belonging. Stocks, they build active wealth, but unless it's managed carefully, you don't always guarantee long-term legacy. As I like to put it, stocks can make you rich, but land makes you wealthy. So, which is better? The truth is, they both have a place. If you want a short-term liquidity and potential, high growth, stocks are great. But if you want stability, legacy, and inflation-proof wealth, land is unmatched. The smartest investors diversify. They grow with stocks, but secure their wealth with land. Thank you for tuning in today's Investment Thursday. I'm Nyota Njema. helping you to light up your investment world, one decision at a time. Until next week, stay bold, stay wise, and keep building your legacy.
Nyota Njema Real Estate, lighting up your investment world.